Hi guys, welcome to this video. In this video we're going to look at penny stocks and more importantly why you need to trade them. Now I think more than anything else on the internet at least, penny stocks are often sort of advertised as get rich quick type schemes, and nothing could be further from the truth. It's nothing different from trading any other stock. There's a couple of slight differences, and I think there's a couple of reasons why you might want to consider trading them. And in this video, I'm just going to try and sort of put some base ideas down, and then in the next two videos, I'm going to show you how to actually trade them, and how to pick them. I'm going to point out some things that you need to look out for, because although they're penny stocks, and the word penny implies that they're cheap, you can lose a lot of money really quickly. These stocks are highly volatile, and you need to be very careful in trading them. But in saying that, there's huge potential in this, and hopefully in this video, I'm sort of going to clear some things up for you and help you understand it a little bit better. So, as I said, penny stocks are basically dirt cheap stocks. They're stocks of companies with a very small market capital, and for the most part, these are companies that they don't really exist yet. They need venture capital. These are companies with great ideas, but they need money to get started. So with that in mind, they're not allowed to trade on the major exchanges. So you won't find penny stocks on the Nasdaq or the New York Stock Exchange. Instead, they trade on the OTCBB, it stands for over-the-counter bulletin board. Now you've probably heard of the term pink slips before. It's just a different exchange, and it is controlled, but it's not nearly as strict as the major exchanges. So penny stocks typically range anything between 10 cents a stock and $2 a stock. So it's not a penny, but it's still pretty cheap. And the easy way to identify them is they usually have a .OB suffix behind the ticker symbol. Now that, if you look at the OTCBB, which is the exchange on which it's trading, that OB just refers to the exchange it's trading on. So if you see ticker symbols with a weird suffix, you know that they're likely to be penny stocks. So in saying that, in recent years at least, some stocks on the major exchanges are considered penny stocks. It's not 100% accurate, but like on the Nasdaq, you'll find that a lot of stocks, $5 and less, are considered as penny stocks. So just keep that in mind, because we're gonna talk about that later on. Now, I don't want to go into the history of the whole thing too much, but I think penny stocks first became really popular in the dot-com boom, and was even called the Penny Express. And a lot of people made a lot of money on both sides, both companies and traders trading them. And it's really that's when the potential started opening up for traders. And although the dot-com boom is over, at the moment there's it's often emerging markets. At the moment, alternative energy, nanotechnology, stem cell research, all these companies that have to do with those sorts of technologies, those are the ones you want to look for, because penny stocks are often, it's what I call avant-garde technologies. It's not mainstream ideas, and most financial institutions don't want to give money to these guys to develop their ideas or their products, and that's why they list on public exchanges. They need capital to develop their ideas. Now obviously if the idea comes off, everybody makes money, but if it doesn't, then we're all going to lose money. So you might ask then, why do we trade penny stocks? Well, obviously, they're cheap, so we can buy a lot of it without spending a lot of money, and because they're emerging markets, there's a huge potential to make money out of them, and then, as I said, it's easy to get started. You can buy a lot without spending a lot. So that if you look at this, I just put this little comparison together just to give you an idea what I mean with volume. Like typically a penny stock, let's say it's 10 cents a stock. Now if you buy 10,000 of them, it's going to cost you $1,000. Now if you were to buy a blue chip stock, it's going to cost you $100 just for one stock. Now if you buy 10 of them, it's going to cost you $1,000. Now, with a blue chip stock, a really good gain would be 20%, which is probably unrealistic anyway. You're looking at about 10-15% gains on a blue chip stock would be fantastic. So, but let's say it's 20%. So, if there's a 20% move in the market, you can make $200 profit for your initial $1,000 investment. But if you go over to the penny stock, you have 10,000 of them now. And penny stocks typically don't move in 10 to 15%. They're usually companies that when they get off, you see huge spikes. You often get things like 500% gains. But if you keep it really conservative and say, well, it's a 50% gain, then for that initial investment, we make $500 profit. So the fact remains, penny stocks give you a lot of buying power, and that's one of the best aspects of it. But penny stocks are dangerous because, as I said, they're startup companies, and most of the time they don't even have any products yet. So these are companies that exist on paper, and they need venture capital to start developing products. So there's a massive risk involved. If these companies don't see the light of day, then it's not uncommon for your penny stock to just disappear. So you might buy them for 10 cents, and then a week later the company can be gone. So be careful. There's a massive risk involved, and without scaring you off, if we can eliminate the risk as much as possible, which is one of the key things in trading the markets, is you want to have as much potential for profit and have as little risk as possible when you're trading. So when I'm saying penny stocks have a huge potential, then we want to tap into the potential and we want to minimize the risk as much as possible. So I think the people that actually lose a lot of money on penny stocks are just stupid. So we want to overcome the stupidity and obviously do a couple of very simple things. It's not rocket science. Penny stocks are quite easy to trade. And what I'm going to do in the next video is I'm going to just show you a couple of things you need to look out for. And just by doing the basics, you can eliminate 50% of the risk. So yeah, I'll see you in the next video, and then we'll have a look at picking penny stocks.